Hello everyone and welcome to This Week in the Markets. So there wasn't much significant news in the market last week. So instead of going through the boring news, this week we'll spend a bit of time discussing our outlook for the market and also a few risk factors that we have to be aware of. But firstly, let's go through to the disclaimer. So information contained in this video is intended to be general advice only and should not be relied upon as financial product advice. Furthermore, the advice has been prepared without taking into account your objectives, financial situation, or particular needs. So you should, before acting on the advice, if you choose to act, consider the appropriateness of the advice having regards to your objectives, financial situation, and needs. So equities have been drifting lower since the announcement of the QE3 program. This was because there was so much speculation built into the market beforehand that after QE3 was announced and there were no new bullish catalysts for the market to rally, traders started to take profit off the table. This is not too alarming because markets don't usually move up or down in a straight line. There's always someone who wants to buy and someone who wants to sell. In fact, when we get everyone on the same side of the trade, that's when we should be concerned about the end of the trend. So the big question now is this just a small correction or is this going to be a long-term change in trend? Frankly, we could never really give a sure answer to it, and neither should you believe someone who says that this is definitely going to be a top or this is definitely going to continue rallying, unless of course you also believe in oracles and prophets. There's always something unexpected happening in the market, and because of that we need to change our outlook whenever it is necessary, so there's no guarantee to say what's going to happen in the future. However, when we trade the market, we ask ourselves what we think the market would do if we assume there isn't any unexpected news. For this, we find that often market sentiments does a great job in alluding the future direction of the market. As the famous words of Sir John Templeton goes, bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. We're obviously off the pessimism phase now, which probably ended around May and June when the whole market thinks that Europe is going to collapse. The skepticism phase then began at around July as traders were still a bit scared to get into bullish positions. Then comes the ECB's announcement of its bond purchase programs and the Fed's quantitative easing. And we had the S&P 500 subsequently rallied off to a new 4-year high. One would have thought that this is the optimism phase where the bull market starts to mature, but instead we're actually seeing quite a lot of bearish commentary still in the market, and surprisingly bears are unwilling to throw in the towel. One sentiment survey that we watch on a weekly basis is the AAI Sentiment Survey, which measures individual investor sentiments with an outlook of around 6 months. We thought that following the announcement of the Fed's QE3 program last week, bullish sentiments would have gone through the roof. Much to our surprise, bullish sentiments only increased by 1% to 37.5 and is still below its long-term average of 39%. This is even despite the fact that equities are now trading at a 4-year high. Even more bearish sentiments also increased by 0.8% last week and is still above the long-term average of 30%. From that, it seems like we can well be in a skepticism phase still, and that means that it's quite a while longer until this bull market reaches the maturity phase. Some has also said to look at the Investors Intelligence Survey, which is conducted by polling the sentiments of investors' investment newsletter. As you can see in this chart, the top chart is the S&P 500, but the bottom chart is the Investors Sentiment Survey. Firstly, regarding this survey, investment newsletters tend to have an inherent bullish bias because bullish articles sell better than the bearish ones. But even ignoring that fact, the bullish ratio of Investors Intelligence Survey barely went above the first standard deviation, and that is hardly significant enough for us to say that markets are being complacent. So basically our thinking is that despite the recent gains, traders are still being very skeptical and many will most likely be still sitting out of this rally. That means that after a brief consolidation and as prices return to a more reasonable level, at least psychologically, we could see equities in the US rallying to a new high again. However, as we said earlier, this will depend on the economic environment not worsening more than expected. There are a few potential threats that we are keeping an eye on at the moment. Firstly, of course, is in Europe, and in particular Spain, whose government is losing support from its people quite rapidly. That's amongst its many tax hikes and spending cuts as the country tries to rein in the record deficit for the 2013 budget. Then there's also Catalonia, Spain's richest region, who is now seeking autonomy after being rejected more tax control power last week. Both this has sent the Spanish bond yields over 6% again and will continue to put more pressure on the Spanish government to seek a sovereign bailout from the Eurozone. Secondly, the China and Japan dispute over the fishing islands is escalating and is threatening trades in the bilateral economy. We've already seen large US companies like FedEx and Caterpillar warning about slowing revenues because of China's weakening economy. We don't know how much or how little that has been priced into the other companies' prices yet, but that could surely be a wildcard as the earnings season begins in 2 weeks' time. But for now, we'll keep a close eyes on the developments of both countries while we continue on our bullish course and use any weaknesses to scout for opportunities in the market. And that's all from us this week. We'll have another update for you next week. Until then, on behalf of the Trading Pursuits team, we wish you all profitable trading.